On July 30th, 2025, US President Donald Trump stunned the world by announcing a sweeping 25% tariff on all Indian goods entering the US, effective August 1st. The announcement, delivered in a high-profile press conference, marked one of the most significant shifts in US-India economic relations in recent memory. The move was not only unexpected, but also signaled a dramatic change in the tone of bilateral engagement between the two countries. The move, paired with an unspecified additional penalty, sent shockwaves through both governments and business communities. Investors and executives on both sides of the globe scrambled to interpret the implications, as financial markets reacted with immediate volatility. The suddenness of the decision left many wondering about the underlying motivations and the potential for further escalation. This abrupt escalation comes just as both nations were preparing for crucial trade talks, casting doubt on months of progress towards a new bilateral trade agreement. Negotiators who had been optimistic about bridging differences now faced a dramatically altered landscape, with trust between the two sides suddenly in question. For India, America's largest trading partner, the financial hit is immediate and severe, with exporters scrambling to assess the fallout. Indian industries that rely heavily on US markets, ranging from textiles to pharmaceuticals and technology, are now bracing for significant losses. Many small and medium-sized businesses, already operating on thin margins, fear they may not survive the sudden increase. The announcement, made via social media rather than diplomatic channels, has injected deep uncertainty into the relationship. The unconventional method of communication left Indian officials blindsided. Businesses now face unpredictable challenges. Many exporters are holding back on selling goods, unsure if their products will even be profitable under the new tariffs. The uncertainty is rippling through supply chains, affecting workers, suppliers, and local economies. The sudden tariffs force India to reconsider its economic dependencies and the reliability of the US as a trade partner. Policymakers are now urgently reviewing alternative markets and strategies to reduce exposure to such abrupt policy changes in the future. As emergency meetings convene in New Delhi, the world watches to see how India will respond to this dramatic challenge. The coming days will be critical as leaders weigh their options and seek to protect the nation's economic interests in an increasingly uncertain global environment. President Trump justified the tariffs with three main grievances: India's close economic ties with Russia, persistent trade barriers, and its active role in the BRICS bloc. He criticized India's purchases of Russian arms and energy, framing them as contrary to US interests. Trump also revived his Tariff King label, accusing India of unfairly high tariffs and non-monetary barriers against US goods. Finally, he called out India's leadership in BRICS, describing the group as hostile to the US and a threat to the dollar's dominance. The message is clear. The US is willing to use economic pressure to influence India's foreign and trade policies. For New Delhi, this transforms trade from a win-win partnership into a high-stakes geopolitical contest. The Tariff King accusation oversimplifies a complex reality. India's average tariffs are higher than the US, but they protect vulnerable sectors like agriculture and have been gradually reduced over time. India's reliance on Russian defense imports has halved in the last decade, with more purchases now coming from France, Israel, and the US. However, Russia remains a crucial energy supplier, providing 35% of India's crude oil, vital for keeping inflation in check. The US-India trade deficit stands at $45.8 billion, significant but modest relative to the size of both economies. Tariffs may shrink this gap, but risk disrupting a relationship that supports jobs and growth on both sides. The numbers reveal a far more nuanced picture than political slogans suggest. The 25% tariff lands hardest on India's labor-intensive export sectors: marine products, textiles, leather, and gems and jewelry. These industries are the lifeblood of millions of Indian workers, many of whom depend on steady export orders for their livelihoods. For decades, India has built a reputation as a reliable supplier of high-quality goods to the world, especially to the US market. But now, these tariffs threaten to unravel years of progress and growth. Shrimp exporters, garment factories, and diamond polishers now face sudden price hikes, making their goods less competitive in the US. With higher costs, Indian products risk being priced out of the market, forcing buyers to look elsewhere for cheaper alternatives. Orders are already being cancelled, and American buyers may shift to other countries, threatening millions of Indian jobs. The impact is immediate. Factories slow down, workers face layoffs, and entire communities feel the strain as demand drops. Small and medium enterprises, lacking financial buffers, are especially vulnerable. Many of these businesses operate on thin margins and cannot absorb such sudden shocks, putting their survival at risk. The uncertainty of an additional penalty makes planning impossible, freezing investment and expansion. Business owners hesitate to hire new workers or invest in new equipment, fearing further losses. India's reputation as a reliable manufacturing hub is at risk as global buyers seek more stable supply chains. If the situation persists, India could lose its competitive edge in the global market, making recovery even harder. The shockwaves travel from rural farmers to urban factories, endangering livelihoods across the country. Every link in the supply chain, from raw material suppliers to finished goods exporters, feels the pressure. The tariffs are not just numbers, they're a direct threat to India's economic backbone, putting the future of millions of workers, families, and businesses at stake. Financial markets reacted instantly to the tariff news, sending shockwaves through the economy. The rupee plunged to a record low against the dollar, and stock indices tumbled, wiping out weeks of gains in a matter of hours. Investors and traders scrambled to assess the fallout as the sense of uncertainty deepened across trading floors and boardrooms alike. Export-heavy sectors like textiles, IT, and pharmaceuticals saw sharp declines, reflecting fears of lost US business. These industries, which rely heavily on American demand, were suddenly facing the prospect of cancelled orders and shrinking revenues. The mood in factories and offices turned grim as workers and managers braced for potential layoffs and production cuts. The uncertainty over additional penalties amplified investor anxiety, erasing billions in market value. Panic selling swept through the markets, with many fearing that the worst was yet to come. Financial experts warned that the volatility could persist, making it difficult for businesses to plan ahead or attract new investment. A weaker rupee makes imports, especially oil, more expensive, fueling inflation and squeezing family budgets. Everyday essentials, from fuel to food, began to cost more, putting additional pressure on households already struggling with rising expenses. The ripple effects of the currency's fall were felt in every corner of the economy. The government faces tough choices, whether to stabilize the currency by tightening monetary policy or risk slowing growth with higher interest rates. Policymakers debated emergency measures, weighing the need to restore confidence against the risk of stifling economic activity. The Reserve Bank and Finance Ministry were under intense scrutiny as they searched for solutions. For ordinary Indians, the fallout is immediate. Costlier imports, shrinking investments, and rising economic anxiety. Families worried about making ends meet, while small businesses struggled to stay afloat amid falling demand and tighter credit. The sense of insecurity was palpable on the streets and in homes across the country. The tariffs are seen not as a minor dispute, but as a major threat to India's economic stability. Experts and commentators warned that the standoff could have long-term consequences, undermining growth prospects and investor confidence for months or even years to come. The shock has upended the narrative of robust growth and global integration, casting a shadow over India's economic future and leaving many to wonder how and when the country will recover. India's initial response has been measured and strategic, avoiding immediate retaliation. The government is studying the implications, keeping diplomatic channels open, and preparing a range of options, from WTO complaints to targeted counter-tariffs. Officials are reassuring key domestic groups, farmers, small businesses and entrepreneurs that their interests will be protected. India is also pushing back against the tariff king narrative, highlighting its own trade liberalization and diversification away from Russia. The immediate priority: gain clarity on the additional penalty and keep the door open for negotiation. India's approach is one of strategic patience, absorbing the shock, building support, and preparing for tough talks. The tariff shock isn't just an Indian problem. Global giants like Apple are caught in the crossfire. Apple has invested billions to make India a key manufacturing hub, part of its strategy to diversify away from China. Now, the new tariffs highlight the risks of relying on any single country, as trade policy can shift overnight. Multinationals face a dilemma: move out of China, but risk new barriers elsewhere. This uncertainty may force companies to regionalize supply chains, raising costs and reducing efficiency. The era of seamless global production is fracturing, with trade protectionism reshaping corporate strategies. Apple's India gamble is now a cautionary tale for multinationals everywhere. The human cost of tariffs is immediate and personal. Factory workers in Noida and seafood processors in Andhra Pradesh face job losses as US orders dry up. For many families, a single lost job means financial distress, lost education opportunities, and rising anxiety. The pain ripples outward. Higher oil prices and a weaker rupee mean costlier transport, food, and essentials for everyone. Middle-class dreams, foreign education, travel, or a better life suddenly become harder to afford. The tariffs threaten not just jobs, but the aspirations of millions of young Indians entering the workforce. Economic uncertainty dampens entrepreneurship and social mobility. The story of tariffs is one of lost opportunities and squeezed budgets for ordinary Indians. The future of US-India trade is now at a crossroads. A quick settlement is possible if India offers concessions, but a deeper conflict could trigger a damaging trade war. India may retaliate with tariffs on US goods, or accelerate trade deals with Europe, the UK, and Asia. Diversifying away from the US market is a long-term goal, but won't offset immediate losses. The crisis tests India's diplomatic skill and economic resilience. For millions, the outcome will shape jobs, prices, and prospects for years to come. The world is watching to see if the two democracies can restore stability, or if this marks a new era of confrontation. The road ahead is uncertain, and the stakes could not be higher.